Yeah, Friday. What's up, everybody? Friday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Folkers. I hope everybody had a phenomenal week as we're about to wrap up the week, hopefully with a bang, and see what happens heading into the weekend. So if you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates and all those fun things. And if you're a regular returning viewer, make sure you hit that thumbs up button. It means a lot. Computers love it. I love it. You love it. Let's do this. We're going to do what we do each and every day, looking at our markets, and we're going to start with the big picture. So looking at our big picture markets, we're going to start with the S&P, as we always do. I always start with the S&P. The S&P is it's the big daddy of them all, right? And so when I look at this on an hourly chart, we've pretty much gone straight up since the month of April began. We're now on April the 9th, and the market has rallied up hard every day since the beginning of the month of April. Our daily chart shows a pretty nice strong move higher. I will say this about the S&P. I would like to see a bit of a pullback for a re-entry somewhere down into this 39.75 area. I don't know that we're going to get that anytime soon, let alone today. But when I look at this, we've got to look and say, where's my entry on a smaller time frame? Because if I look at the demand levels below current price and we identify where are the areas to get long below current price, well, here's a little bit of a demand level. But how was our strength of the move away? Meh at best. So I got to come a bit lower, and I might come to this, and I would say, what was my strength of my move away? It was about a 45-degree angle, maybe a little bit more, but we stayed in there a really long time, which makes it a bit weaker. So in all reality, I don't really have any quality areas of demand until I get down into this range here. And you can see that we've got a 15-minute level identified down there. And so that's at that 40.39 area where you really have that rally base, very strong rally. Now, we might get a turning point somewhere down in this range. But to me, none of these demand levels are really worth leaning on. So what I'm going to do is take a look for a breakout above the high, because it's a fairly standard play when you have an all-time high to take a breakout above the high for an intraday trade. That's kind of what we're looking at as an opportunity. Now, if we just poke above here, then look for a retest back to the origin of the move that caused us to poke above that line. That's the way we want to play that breakout. At the NASDAQ, we are a little bit cleaner with a potential entry. When looking at the NASDAQ, I would say that a good area to look at would be this little level right here. Now, this is not formed at a great time of the day. Matter of fact, it's formed at a pretty terrible time of the day, but it's a better move away than the other markets. In reality, my best level is this 13,382, which is this little rally-based rally that was formed right in here. Now, technically, you could also potentially get a little move down below this breakout line, but we would certainly need a lot of basing for that to make sense. There is also the potential for a move below here at 13.7 because we're basing there at the moment. My only fear with that is that it could be a little bit of a Globex trap with this demand area right here. Once again, this demand area is not very strong, but could it be strong enough for a Globex trap? If we weren't at an all-time high, I would even say that this is a fairly clean potential entry with this little drop base, very strong move away. But being as close as we are to the all-time high, now we're not quite there yet in the, actually, no, we're right there in the NASDAQ. I don't like shorting the all-time highs. I don't tug on Superman's cape. I don't spit into the wind, and I don't want to short an all-time high. So when I look at the 4-hour chart, it's maybe a little bit clearer to see that. You're still a little, not quite there in the NASDAQ. That would be our all-time high that we have to reach. All right, crude oil. I went through yesterday and just deleted all my crude oil lines. I just deleted all the lines. And the reason I did is because we're basically going nowhere. And it gives us an opportunity to look at it from a fresh perspective and to start fresh. And I don't really like to delete my lines, but it allows me to start fresh from a new perspective. So what do I do? How do I do that? Well, I start at current price, and I'm going to look up and to the left to find some quality areas of supply where I think there could be turning points. And so as I look up and to the left on this hourly chart, I do have a level that's in here, but it doesn't really show up cleanly on the hourly chart. I've got to come all the way up to this area here to find my cleanest supply area, right? My cleanest area of supply. Now, if I go to a 15-minute, we will see that there's a decent little level right here on the smaller time frame. Now, what about my buy areas, my areas of demand? Well, I do have a decent little demand area right here on a smaller time frame. And then we go out a bit further and we go to the hourly chart and we look to see, do we see something on the hourly time frame that is a bigger picture? Well, nothing on here, so I need to go out further. Let's go 90 days. When I go out a bit further, I want to look below this level. Now, why didn't I pick some of these pivots? Well, because these were retests of one another. And that's all sitting on this area of potential breakout. So I'll leave that line there. But I'd have to go below that line. So coming over here further to the left, I'm really doing some zooming in over here. I'd have to come all the way down to this one as my real first strong one. And I really like the time of day that it's formed. Many of you know that I'm a big fan of trades that are formed right around the London Open, and that's right smack dab in the middle of this move. So now that's kind of far from current price. I know that, and usually that's what happens when you've got a bigger picture, potentially on the bullish move. But we could go sideways here for quite a while. I mean, this is a very summer thing to do oftentimes is to go sideways for a while in crude oil. So don't fight it. Don't fight it. Wait for the levels to come to you. And then last is gold. Gold, we had a little bit of a demand area right here identified that we took a look at in our in one of our live trade rooms. But we've already touched it. 1, 2, 3, 4, 5, and we got a really long reversal candle here trying to make it work. So when I see this, if you're in this trade, I think it makes sense to move your stop to break even because we're already just about at the 6 candle rule, and it's actually setting up for a potential breakdown. I do like, if we get a pop up out of there, this area here for a potential reversal. Okay? So that's our big picture levels for today. Hopefully there are some opportunities in there that are exciting to some of you, although not too exciting, I hope. And now let's take a look at our stock of the day. So our stock of the day comes to us from somebody who put their stock down on the comment section below. Now, by the way, if you want me to look at a stock, put it in the comment section down below. And it's ticker symbol ARKG, ARK ETF. So looking at ARKG, I'm going to look purely at the technicals that as we see them. The first thing my mind sees is I see this line here and lower swing highs. So the inability to create new swing highs is definitely something that I pay attention to, and we are rolling over from that level. So at first blush, I look at this and say, okay, slightly descending triangle pattern after a double top. So we had a double top price pattern that was formed right here, which would give us a measured move from there to there, call it. And our measured move worked out almost perfectly, right? So our measured move off the double top right here worked out almost perfectly, where we touched a little bit below there, but basically hit it, and then rallied back up. Now, if it's a double top and after the measured move, if we get above this prior hump, this prior swing, then we know that, okay, that was just a corrective move back down, and our next impulsive move up should continue. However, our corrective move back down was able to hold us below that swing. And so now, do we start a new impulsive move to head to the downside? There's nothing on here that I want to trade as of yet. But when I look at this for a bigger picture trade down the road, I would look for a breakout below here for price then to trade down into the 65 region. I think that's a very realistic entry. Now, could it go long? Sure, it could certainly go long. There's certainly an opportunity to get long, but it would be above probably 98. You got to get above this little supply level here at 98. So that is one that I'm looking at for today. Once again, if you've got something you want me to analyze, put it in the comment section down below. But maybe if this one makes sense for you, put it on your watch list. So until Monday, everybody, hope you guys have a great weekend. I will talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.